Hello and welcome to today's live webinar where we look at ASX investments opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. The technology that I'm using today is our Investor Signals members area. If you'd like access to it, it's $1,320 for 12 months. And you can contact us on 1300 614 002 or just send me an email, leon@investorsignals.com. Moving straight into a graph of the US indices, and the key message in today's recording really is that some caution needs to be approached with equity markets now that we've had the rebound from the December sell-off. So this was the December quarter. The market's in round numbers corrected 20%. We've rebounded again, round numbers 10%. We're back at that 50% point. We've got a lower low, lower high. And for clients that follow the algorithm signals, you would have noticed that we've had a very large number of sell signals building up over the last week or two. So for me, the initial part of that is at least be cautious that we're going to start to see some selling pressure, which may be just consolidation in the US, but certainly watch the shorter term indicators for a more meaningful turn down in equity markets. And in particular, where that's likely to be is it's a tale of two markets. We've seen interest rates move lower over the last few months as the market's repriced the chances of the US raising rates this year. And in the process of that, you've seen defensive names rally. So real estate investment trust, utilities have all done extremely well. High PE names are the ones that I'll probably try to sort of focus on today as a reference point to where I think we're probably likely to sort of see greater risks play out. Okay, so again, the picture here is lower low, lower high, back at algorithm sell signals in the Nasdaq, likewise in the S&P 500 under sell conditions. If we have a look at the Dow Jones, similar pattern. So I'm assuming that probably as early as sort of middle of this week we'll start to see the US equity market run into a greater level of resistance than certainly what we've seen over the course of the last 4 or 5 weeks. Domestically, the XJO, very similar, so a similar pattern. We've had the sell-off, we've had the bounce back, we're sitting back at resistance, and as we toggle through some of the stocks today, we'll focus on the lower high formations there, and then there's the STW, which is the ETF on the XJO. So what I want to do first is let's go into the model portfolio and just show you that the number of stocks currently in the model portfolios is at record low levels, and that probably goes without saying. So what I'm doing here is going across, clicking model portfolio. I'm initially going to select ASX 20. So out of 20 companies, what it's saying is these 7 are in the algorithm model portfolio. Now, if we went back a year or so ago, there was probably something in the order of 14 to 15 of the 20 companies that were in the model. But over the last 12 months, and in particular with this rally back that we've had, we've started to see a large number of stocks removed from our model portfolios, which is just another sort of reminder of being a little more cautious as to how you're structuring your portfolio at present. So if we go through the names that are in the 20, ANZ, CSL, so the way that I use this is I get the least number of days held to the top. So that tells me the most recent stock that added was Woodside Petroleum. It's been in the model for 110 days. CSL's been in there the longest at 1,300. This is the percent gain or loss from when it was added. So the two sort of key stats that I get from here is to have a look by the least number of days at the top, and then I'm also interested to have a look in, it's obviously not such a big issue when you're only looking at 7 stocks, but when you're looking at the models that may have 20, 30, 40, 50 in it, I find this useful as a way of sorting it. So percent gain, what this tells me is I'm buying this 1.24% below the original entry price where the signal was triggered. Woodside Petroleum slightly below as well. and so forth. So as you go through those names, that's a top 20 model. Let's have a look at the top 50 model. Days held, so we get this to the top. QBE is the most recent addition, then Woodside Petroleum, Goodman Group. What I want to do is I'll click on these and we'll toggle through some of these. So these are all under buy conditions, which is going to be in contrast to the next segment, which will be the focus of what's happening in the market, which is the large number of stocks under sell conditions. So again, any stock that's in the portfolio, in the model portfolio, means that they're under current algorithm buy signals. So let's click on QBE and we'll roll through these fairly quickly. Look, QBE, I think, surprises to the upside with the upcoming earnings result. In particular, what I'm looking for there is commentary out of the company around returning capital, special dividends. They've been selling sort of some of their non-core insurance businesses around the world, and we look for commentary out of the company on that. What we're starting to see is the early stages of a structural higher high, higher low, and we'll look for that upcoming result to see if they make commentary on the special dividends. Now, Woodside Petroleum, so this is in the model portfolio as well. If we think about this, that it's created a higher high, higher low. It's probably back at fair value where it is at the moment. So a lot of these stocks that are in the model have been triggered, months ago. So we're probably not going to go too far today with identifying buying opportunities given where the index is at. We can identify sort of quality names that we want to continue to look at, especially if we get a sell-off in the market later this week or next week. But a big part of sort of what we'll be looking at today is obviously the number of stocks that are at sell conditions. So Woodside Petroleum, quality business, we like it, and buying it on a dip just it makes sense. Goodman Group, getting a bit expensive here at the moment, less than 3.5%, probably down at 3.2% dividend yield. It's a real estate investment trust, so it's an example of where it's done very well as interest rates have come back down. So we last had the buy signal there at around $9.90, now pushing $12. Macquarie Group, so again we had the higher low structure here. The algorithm signals triggered it. It's back in the model portfolio and it's pushing back up. I suspect Macquarie will deliver somewhere around 15% earnings growth, which is well above the average earnings growth of the Australian market, which is tracking probably somewhere only around 4% maximum at the moment. GPT, so another real estate investment trust that's done very well as interest rates have come back down, but I think this is looking expensive at the moment. They'll grow earnings about 4%. Stocks on just under a 5% dividend yield at the moment, but it's certainly had a very good run. ANZ, it's the only bank of the four majors that's in the model portfolio at the moment, and it's slightly ahead of sort of where it was added to the model. Dexus, example there, a real estate investment trust doing well. So these are names that have positive structures in place. Centre Group. So if you are thinking about buying stocks, or you're saying, well, what is it that I need to add to my portfolio? This is the starting point, is to come in, have a look at the model holdings, and because these, for the large part, will have more bullish momentum patterns within. Centre Group, so we own this. We've been selling covered calls to drive that into a 10-12% cash flow. Vicinity, so it's a fairly recent buy signal down here around 260. Hasn't done too much since then. Lendlease, so we like this coming into the result. This, by probably a wide margin, is the worst performing stock in the model portfolio at the moment, but we're thinking that we'll see commentary out of the company around them maybe spinning off that engineering division that resulted in with the large cost overruns, which is responsible for that share price fall. Woolworths, I like this business, but expensive at 22-24 times earnings for a consumer staple business. Is probably unlikely to grow earnings much above 5% on a sort of a 2-3 year outlook. It's pretty hard to continue buying it at these levels, but it'll be a really interesting earnings result to have a look at what those growth levels look like in the business. James Hardie, like Lendlease, obviously that's an area of the market that's come under pressure. But the trading update from James Hardie, their full year guidance looked a little bit better than the market expected, and we've seen that recover. Computershare, this is in the model at the moment, but I must admit I'm cautious on it. I think it's expensive. ASX, so this has done very well. So positive structure here in place, higher low there at 57, and it's rallied, but again getting a bit expensive compressing down to less than a 3.5% dividend yield. Wesfarmers is in the model. CSL, so even though this is expensive, the higher low formation here at around 170, owning it, selling tight covered calls makes sense for CSL. Treasury Wines, we like this name, continuing to make higher highs, higher lows. If we look back at the history of the algorithm model, it's done a very good job of adding this stock in at good value levels. And Treasury Wines should grow earnings around 20%. QBE, that's back to the beginning there. Woodside Petroleum, so we've covered those. So again, what we did there is go into model portfolio, select the model you're interested in, and then toggle through them. So you've also got models there in the US, you've got ASX ETFs, and if you'd like to know more about that, just call the office when you're logged into the members area. All right, so next on the list is what I wanted to do is have a quick look at the earnings calendar. And then we'll go through the ASX recent signals. So I'll just bring this into screen here. So today we've had Amcor's result. That's been one of our high conviction buy ideas. So we've been long that coming into the result. They've got the acquisition of the Bemis Group, which will finalise in the next quarter. AZJ, some of these I haven't had time to go through in great detail, but on surface, AZJ looked like they delivered high single-digit growth, but I'll just need to read through that more and comment on the blog tomorrow. Bendigo disappointed, and we're on the short side of these regional banks. GPT really came in line with expectations, 4% earnings growth. JB Hi-Fi did a little bit better than expected. So tomorrow we've got Macquarie providing an operational briefing. We've got Transurban's half-year results. Wednesday will be an interesting day. So car sales, so we've actually got an algorithm sell signal on that at the moment. Computer share, I think we'll look at that one with great interest. I do have concerns that it's trading on a high PE, and some of the profit results are being achieved through cost cutting, so it'll really be a focus on what the revenue stories look like there through computer share. CSL will be interesting, looking for 10% plus earnings growth there. Tabcorp, further confirmation that the merger with Tats Group is delivering the cost synergies. AMP, well, then into Thursday, ASX, we're interested in that. South 32, Suncorp. So certainly this is probably the busy week this week and next week within earnings season. I do think Origin on Friday surprised to the upside, and that's just a likely outcome from their better LNG dividends from the Curtis Island project that they're involved in. And then we get into sort of Ansell. But a lot of these names, when I look at them now, I think they're just back at full value. So we're not seeing sort of that deep discounted levels that were obviously there a few weeks ago. So we're back at resistance. And there's only a handful of names that we're likely to surprise on the upside through earnings. And obviously I'll focus on those with the blog posts. But looking Amcor, we can tick that one off. I thought that worked well. Bendigo on the short sides worked well for us. We like GPT. I think Macquarie holds up okay. Transurban looks a bit expensive. So there's a couple there that we'll certainly revisit on the blog. Okay, so from here, let's go into the recent signals. So what we do, click on watch list, come down. Recent ASX signals. There's a large number of these, so we click on the first one here and we'll start toggling through these. So the reference to whether it's under buy conditions or sell conditions is a reference to whether the most recent signal is a red or a green marker. So this is the ASX 200, so it's under sell conditions. Adelaide Brighton, lower low, lower high, under sell conditions. And as I move through these, I'll highlight the ones that we're focusing on. So Real Estate Investment Trust, their Abacus, under sell conditions. AGL, so I thought their earnings result maybe disappointed a little bit. They've had to increase the payout ratio to support the dividend yield. I'm just not sure where the excitement is for AGL growing earnings over the next 12, 24 months. So a little bit cautious on that. And I think if you own it, you just want to sell covered calls over it. Luckily, the low interest rate environment will support money flowing into utilities. There wasn't much there to excite in AGL's earnings result. Aristocrat Leisure, this is probably a favourite of most fund managers in Australia. So it's in some ways a little bit surprising to see it roll over under sell conditions at the moment. So for the most part, we don't hold exposure for Aristocrat anymore. We did have a trade after buying at lower levels. We've taken profit on it, and we'll reassess that after the upcoming earnings result. But a little bit cautious, just high PE name and undersell conditions at the moment. ALS not doing it there at the moment, nor in Atlas. Ansell, so we like this name, but it is undersell conditions and compressing back down to sort of 3.5% dividend yield. So at around this sort of $24, $25, I think it runs into resistance at the moment. APA Group, not doing there. Luminous, obviously these resources have been very strong, but mindful that we're starting to see the sell conditions come up. On the flip side, these inverse ETFs, so BBUS and BBOS, which go up in value when US equities or the XJO goes down, they're under buy conditions. So when you think about what's under buy at the moment, there's a few gold positions and a few of these inverse products. So the bear is an inverse ETF to the XJO, but it doesn't have a multiplier factor. So 1% fall in the market means this goes up 1% in value. So just flagging high and high low there, early stages of that developing. BOQ, so these regional banks are disappointed off the back of Bendigo's result today. And we can see here, if we look back over the last 12 months, the lower low, lower high structure. And we had another confirmation of that just in the last month or so. Brambles, so back up against resistance. I like the story here with Brambles, but it just looks expensive. They've got the spin-off of the plastic pallet pooling business, which we're looking for more detail out of that strategy. But we know from company commentary that they're in a low growth environment, only 3 to 5% EPS growth. CIMIC Group, the earnings result was very good, continuing to win a large number of new contracts. So I think sort of that whole theme of infrastructure development in Australia over the next 3 to 5 years, it provides a tailwind for both CIMIC and Downer, but just highlighting that they are under algorithm sell conditions. So if we do see a more significant pullback in the US equity markets, CIMIC and Downer will be two names that we're happy to revisit on the buy side. Collection House not doing there at the moment. Cochlear under sell conditions, Carnarvon under. So some of these I'll just skip through just so we can get through this in a reasonable time frame. Dulux now under sell conditions. Domino Pizzas, I think that this probably struggles a little bit, both from a valuation and earnings growth standpoint. Downer EDI, so we owned it at lower levels. We've taken profit. Maybe back down at around 650, we'd take another look at that. You may recall from the webinars at the end of last year, I'd highlighted that sort of this hack ETF to back down at around $6 was good buying, and it pulled back into that range that we looked at last year. Now it's rallied back up to 7, now under resistance, so that's under sell conditions there. So most of these global indices, we're seeing sell signals within them. This is the iShares Asia 50, which is interesting that we're seeing sell signals across those now as well. So Insurance Australia Group, I thought the earnings result here was very good. This was one of our high conviction ideas coming into earnings season. So the underlying business appears to be growing at around 15%, which is maybe a little bit above where the market was expecting. And you've seen the stock price rally from $7.25 up to $7.50. But owning it and selling tight covered calls or buying it on any pullback, I think you'll be well served. iShares Europe, so that when you look across the European indices now as well, we're seeing a lot of sell signals. So that's the global 100 under sell signals. The S&P 500. So the ILC is the ASX top 20. So my view is that resources are pretty close to the top of this breakout move that they've had, and it's just hard to see where the catalyst for the banks to push them higher. And then a lot of these industrial companies are looking pretty full value as well, so it doesn't surprise me that that top 20 ETFs now under sell conditions as well. Iluka under sell. Again, the global 100 under sell conditions. Let's move through a couple of these. Iris, I think their earnings result was better than the market expected, but I haven't had a chance to actually read through that in detail yet. Magellan, I have a think about this one on the short side. Obviously, their inflows for global funds were actually very strong, and you saw the stock rally from 23 back up to $29. But if we actually see a little bit of a rollover in the US equity market, I think this may have leverage to the downside. So just watch these shorter term indicators and just see if it starts to sort of build resistance up at around that $30 level there. So we might just add that one onto the list there, so MFG, and I'll put that in the notes just as a reminder. Medibank, so back up against resistance, and that's just a valuation argument there. I think it's sort of 270, it's full value, so if you own it, take profit, you could maybe look at selling an in-the-money covered call to protect the downside and collect the upcoming dividend. Australian Bank, so interesting there that we've kind of got this rollover, lower low, lower high, so the bank ETFs under sell conditions. A lot of the smaller end mid-cap ETFs are under sell as well. There's a small company ETF, equal weight ETF, so again, large number of sell conditions so just as a reminder, what we're toggling through here are the algorithm signals, both long and short, albeit majority of them are short signals from the last 7 days. So I've gone in a watch list, gone recent signals, and it stores the last 7 days of signals. So News Corp, I think this is something you can think about on the short side. I think sort of the old media assets there struggle. So again, here's an example of actually a buy condition. So this is a gold stock. So I've added that into the notes, and we'll revisit that in a moment. So Oceana Gold, so it's under buy conditions there at around $4, which I think that the momentum there looks pretty good. Origin Energy, now this is a bit controversial. It's under sell conditions, so I normally wouldn't look at buy-side ideas, but occasionally, we do. Obviously, Amcor was an example of one where the fundamentals seem to overpower the technicals, but Origin will be interesting just to see whether those dividends from the natural gas assets, which we saw that flow through in Santos's results. So we're looking for strong numbers there and maybe confirmation of them reinstating their dividend, which should possibly support Origin trading up towards $8. I think it's where fair value is. Oil Search under sell conditions now. So if you go back sort of a month ago, we were talking about buying Santos, buying Woodside, buying Oil Search. I just don't think we're in that environment now with the global equities up against resistance. Oil probably has a pause in this recent rally that it's had. Financials ETF under resistance there and sell conditions. Resource ETF now under sell conditions. Let's skip through some of these. So Perpetual back under sell conditions. So this was an interesting one. They've struggled with outflows within their managed fund business, and if we look back at sort of the history of where it rolled over, created the lower high formation, initially sold off from 50 back down to sort of just below 40, bounced back up to 46, sold off down to 30, back up to 35, near resistance again. So might be an interesting one for the back half of this year as to whether Perpetual sort of just gets down to a valuation level where that selling exhausts and we actually start to see a higher low formation. So PRU is under buy conditions, not the stock that I follow too closely, but I'll make a note of that and we'll have a closer look at the fundamentals there. So again, a lot of ETFs in here as well, but mostly under sell conditions. Sandfire Resources now under sell conditions. So we got the top 20 fund, we got the top 50 fund. So this is the ASX top 50, just flagging that lower high formation there. Stockland's now back under sell conditions, so that was a recent signal just in the last week. Sonic Healthcare now back under sell conditions, so either take profit on Sonic or come down and sell in the money covered calls. Sky Entertainment. So Santos now under sell conditions. So this is the Spider 200, so reflective of the XJO, so that's one we sort of looked at the beginning of the recording. Suncorp now under sell conditions. So we actually were buyers of this over the last few weeks, but at around 350, I think the move's done, so take profit on that. Tabcorp, the merger with Tats Group should be a very stabilizing long-term value proposition for shareholders. But I think maybe the concern here is, does consumer spending slow down at the margin within this gaming space that impacts the growth rate of Tabcorp? And for me, now that it's rallied from 420 up to 480, it's roughly back on 5% dividend yield, I'd like to see this upcoming earnings result to learn a bit more about what the revenue growth in the business is like versus the profit coming from just the cost savings from the merger, and that'll be something that we'll look at and I'll comment on the blog about. But for the most part, I think you want to be thinking about either taking profit or selling calls there in Tabcorp. And getting towards the end of the list here, so some of these Vanguard ETFs, all under sell conditions. Westpac Bank, so in the last few days of last week, we had a sell condition there on Westpac. So again, if we look back over the last sort of 12 months, for the most part, it's been under sell conditions as it made lower lows and lower highs. And again, here at $27, and I tend to agree with those calls. I just don't see where the revenue growth is coming from for the banks to re-rate and trade too much higher. Western Areas under sell conditions. And there we are. So the message is, overwhelmingly, we're moved into an environment where you need to be thinking of taking profit, trimming some gains, sitting on a little bit more cash, and just seeing if we see a more meaningful pullback within the US equity market that then allows us to buy the high quality names that are in the model portfolios at better prices. So part of the process around these webinars is that we send out the replay, and within the replay there's a link to the notes for the high conviction ideas. So I'm just going to bring those into screen. So again, where you'll find this is when the replay is sent out, scroll down the email, there'll be a link there, click on it, and it'll open up this spreadsheet. So two that we're going to add in here, and I'll do a little bit more research on them. I won't put them in the high conviction, sorry, I'll just put them under the notes here. We'll put PRU, and we'll also add in MFG, which is the Magellan Group. If we just go back and have a look, Healthscope's been on the high conviction list. That takeover deal is being recommended by the board at $2.50 a share. So for the most part, that's played out. Origin will watch the earnings result on Friday with great interest there. Amcor at $13. Obviously, we're talking about that being a high conviction idea. It's now $14.50. Suncorp, I think these insurance names have already played out. So, $13, that was value at $7.25. We're buyers there. QBE at sort of $10, we're buyers there, but I think for the most part, could be a little bit more left in QBE's results. So we'll wait to see what that looks like. Ansell was a buy, right, but back at sort of $24, $25, that's full value. Oceana Gold, so that was one that looked at today. I think ResMed, the correction that it's had from $16 down to $13, you're going to have to be patient because we'll be waiting another 6 months for another earnings update to see whether some of the trends that the market were disappointed with are starting to abate. But from a longer term perspective, ResMed's good value. On the short side, the index is under sell conditions. Regional banks, Qantas, some of those higher PE names that we looked at today. So I think part of the focus of commentary on the blog over the next week will be looking at some of these short signals in the market. Thank you for listening in, and if you'd like to discuss any of these ideas, please don't hesitate to call the office. Thank you.